of Canada released its business sentiment survey today, and it captured some pre-COVID-19 periods, at least the depths of it. It did, though, do a special survey, a smaller slice of businesses, and showed that we are beginning to see, but that it might get worse, worsening sentiment. I want to check in with Benjamin Tal, Deputy Chief Economist at CIBC Capital Markets. And Benny, anything in here that surprised you in any way, or is this what you would expect to see given when the Bank of Canada was in the market?
Yes, absolutely. The first survey, of course, nobody cares because it was before the virus. Now we're talking about the secondary survey that's starting to show basically a free fall. I suggest that the next survey will be much more severe. Clearly, we know that this survey does not tell you the whole story. We will see more bad news coming in the next one for sure.
Of course, more bad news in the sense that we're going to get the hard data, but we're also getting government support. And is there some hope on your part and other economists that those two things kind of cross over each other and that at least from a sentiment point of view, the idea that there is help and you're beginning to be able to quantify it is going to offset some of the uncertainty that's been out there?
Absolutely. I think that the government support and what the Bank of Canada and the banks are doing is crucial in terms of trying to get sense of what's happening. Just, we do this exercise trying to figure out how many people will go under, will declare bankruptcy, given this environment. And if you look at the past, clearly, when the unemployment rate goes up, the bankruptcy rate goes up as well in a very significant way. In 2008, it went up by 40–50%. It's possible that this time it will not happen because you have the government support buying time to allow us to reach a new equilibrium. That's extremely important. We have never seen this kind of situation in our lifetime, but we have never seen this kind of government support in our lifetime. This will buy enough time. I know it's going to be confusing. There will be a lot of delays, a lot of confusion, but it's going to help. And what we are missing is a few other things like rent and small businesses, but it's starting to move in the right direction. It will buy us time that we need. There is no question about it.
There is an important piece of this, and in hindsight, it'll be easy to measure, but we're going to want to try to measure it as we go. And that is the number of individuals, small businesses, layoffs that would have happened anyway. In other words, we were due for a recession at some point, assuming the business cycle wasn't dead altogether. And there are businesses that fail at those times. People lose jobs at those times. People go bankrupt because they haven't saved enough. To your point, we're papering over these things. We're pushing them down the road. Are we just delaying it, or might we save some of them? In other words, if this is the recession we were going to get, will it look different than an ordinary recession? Or are we just waiting for the inevitable and it'll still happen after this is over?
Well, I think that if you look at the unemployment rate 2 or 3 years from now, it will be higher than otherwise. I think that there will be some lasting impacts of this crisis in many ways. Many restaurants, many small businesses simply will not last this recession because it will be too long and too severe. However, I think that the interesting exercise is to look at the situation, let's say, 3 months from now. What will our life be like 3 months from now? Not the next month or two, we know that. 3 months from now, and I envision a situation in which we will start going back to semi-normal. People, older people, will be asked to stay home. People with preconditions will be asked to stay home. Mm-hmm. Office people will remain at home, most of them. Manufacturing, construction will work at different shifts, basically flexible hours. It will be a very different way of going back to normal, and that will be the right way to do it because we are starting to see already in Singapore, in China, a second wave of the infection because they are moving too fast. We have to take our time. In July, August, we will be so tempted to go back to normal. Even governments will be sick and tired of writing checks. But at the same time, moving too fast will be very risky. So that's the way I envision our situation 3 or 4 months from now.
We have, also all in real time, the government, just today, the Prime Minister saying they're still tweaking just which Canadians will be available for that emergency relief benefit because there's so much we don't know about how this is all going to work. But what's your review so far, Benny, of the programs that are available, the speed at which they're being deployed, which is to say, so far nothing. Is it enough? Are we doing the right things? Are we doing everything we can?
First of all, I think we are doing the right thing. We are moving fast. We are moving very quickly in a very aggressive way. We're definitely doing the right thing. However, there are all kinds of things that we have to fix. An example, the 30% decline in revenue in order to get the wage subsidy, as you know, 75% wage subsidy, a company needs to show that their revenue year over year went down by 30%. I spoke to many CEOs of companies. It's very difficult to show because of the way the model works, the way their business is run. So this can be a significant issue because they are telling me, listen, if we cannot show the 30% decline, and we don't get the 75% wage subsidy, eventually, and this eventually is next month, 2 months from now, we will have to let people go. And those people will have to go to the EI system, which is already crowded. So I think that we have to rethink the 30% decline in revenue, make it more flexible, because otherwise those people simply will go to the EI system, which is not a good thing.
All right, Benny, always great to chat. Benjamin Tal is Deputy Chief Economist at CIBC Capital Markets.